Let's start with the big event on Friday, which was the president's announcement of his budget. $6 trillion, $1.3 trillion in deficit in each of the next 10 years, it looks like. What's your reaction to that budget?
Look, he's going to keep our country together by building back better. He's going to fix a whole set of lagging public investments in everything from making the airports work so it doesn't take half again as long to fly from Boston to Washington as it used to making the IRS be able to collect taxes, to having modern investments in science and technology. That's all right, and that's crucial. So is doing much more for children. So is doing much more for people who've been left behind. I'm all with that, and I think it's hugely important. But just because you care doesn't mean you don't also have to count. And I think we are, as a country, going to have to look at the total amount of spending we're calling forward and the total amount of taxing we're calling forward. And I am worried in both the short and the medium term about overheating. It might be that the forces of what I used to call secular stagnation, basically people not wanting to spend, are going to be so strong that we need these kinds of massive budget deficits and extraordinarily low interest rates to propel the economy forward, and this will work out fine. That could be the case. But I think the greater chance is that we're going to have some kind of collision between demand and supply. David, if you look at the administration's economic forecast, they've done what all administrations do, and it's entirely legitimate. They, several months ago, froze a set of budget assumptions to reflect in an entirely honest and accurate way what the consensus was then. But gosh, the consensus sure has changed. I don't think the idea of a 1.2% 10-year rate for this year looks particularly good right now. We've already had just about 2% inflation just in the months we've had of this year. So I think the year inflation figure is going to come in pretty high. And I think that the magnitude of those surprises just speaks to the fact that we're going to have to make some adjustments that go beyond what I think is the Washington three-part cycle on inflation. First, you deny that it's a problem. Then you say that it's just due to specific factors and specific transitory factors. And then you say, well, it's not really that big a problem after all because wages are going to go up along with prices and it's all going to sort of be okay. And I guess I see us moving through that cycle a bit, and that worries me. And it worries me because I think it's so important to do the fundamental things that the president is trying to do, but you do have to manage the macroeconomics right as well.
Larry, one of the things you mentioned was the possibility of taking some of the money that's been appropriated for the state and local governments that may not need and reusing it in other ways. It appears that the Senate Minority Leader, Mitch McConnell, agrees with you on that. He quoted you on that and said, boy, Larry Summers has got it right. So you're in raging agreement, it appears, with a Republican here.
Well, I wouldn't have necessarily expected to be on the same side as Mitch McConnell, but I think on that question, he does have the right view, and I think I have a view that we would do well to follow. But the minority leader is selective when he quotes me because he doesn't tend to pick up on my view that the Trump tax cuts are looking increasingly grotesque in the current environment of massive stock market, zero cost of capital, all of that, and the kinds of steps that President Biden wants to take to restore some normality to corporate taxation and to, at long last, do what we all ought to be able to agree on, crack down on the erosion of profits because they're moved to the Cayman Islands and places like that through international cooperation. I have to say I'm disappointed that that can't be an area of bipartisan American cooperation. I would have thought that that was the kind of thing that Republicans would stand for on strengthening America grounds, encouraging investment in America. So I think the minority leader is way too selective.
Larry, we do a summer's inflation watch on this program every week. You've already mentioned some of the issues about inflation, but we also got some data out. We didn't just get the budget on Friday. We also got some data, particularly core PCE. What did you see in those numbers?
Look, more of what I saw in core CPI. On a month-to-month basis, the inflation rate was running at an 8% annual rate. Now, that's, of course, totally distorted by transitory factors, as Secretary Yellen and Chairman Powell point out, but you can have a lot of transitory factor in an 8% number, and it's still saying something quite ominous.
Finally, Larry, let's sneak in a couple of short Summers Says here at the end. There's a big event in the corporate world this week when Exxon the management lost a vote, actually getting activist shareholders to put at least two members on the board to really make it more of a climate-friendly company. Is this the beginning of something to come in terms of shareholder activism, particularly in ESG?
I think it marks something. You can like ESG investment, you can not like ESG investment, but it is here to stay as a major phenomenon that's going to be really important in many capital market aspects. And I just hope the steps that are taken are substantive rather than just optical. And I think we have to think very carefully. You know, if we're going to have a charge away from fossil fuels and we're going to move to renewables, which is the right thing to do, should Exxon play a larger role? Or is Exxon good at fossil fuels and they may not be the best at solar power, and they're better off paying out their cash flows and letting the markets allocate those cash flows to the best places? I think there's some hard questions that we have to think about, but for sure, ESG is a big deal for a long time to come.
Last one, Larry. The real yield has been in negative territory, well in negative territory. It's come up a little bit, but it's still negative. When do you think we'll see a positive real yield?
Between a Fed that's complacent about inflation, rising inflation tendency, and crucially, a whole set of structural factors, demography, cheap information technology, demassification of the economy. I think it's going to be a long time till we see a 10-year tip that has a positive real yield. Not in the next 3 or 4 years would be my guess.